We are doing session 2 of this 3-session series. And today we're going to talk about protecting what you have, what you get. So I'll do a quick recap of session 1, and then I'll talk about products and how to protect yourself from different financial products. Then protecting yourself from scams. And then finally, the main thing is protecting you from yourself and self-sabotaging. And again, Q&A at the end, but please, if there is any question, interrupt me. You know who I am. Again, like a quick disclaimer, I'm a financial advisor, but none of this is financial advice. This is only for information and education purposes, and past performance does not indicate future results. So do your research before making any financial decisions. So we talked about the need for investing, and the 3 main areas in retirement are income, preservation of wealth, and growth, because you have like a long longevity ahead. Then we talked about the basics of stocks and bonds, and then mutual funds and ETFs. Went over how expenses can hurt performance and your overall portfolio size. So things to really pay attention to. We also went over risk tolerance and some additional investment options, along with their risk and expected return based on historical performance. And then I think Lynn had a question about expense ratio. So I just included a slide here. So if you have any investment like a mutual fund or an ETF, you can go to morningstar.com, and in the search, is the top button for the contract? Yeah, there it is. Okay. So you can go here and enter the ticker, and it'll show you the net expense ratio. So this page is for Vanguard Broad Market Index Fund. The expense ratio is really small, it's 0.03. And then there is another fund, I don't know what this fund does, but the expense ratio is this 1.52%, which is pretty high. Any questions from last session? Very good.
So yeah, I mean, it was interesting to see, and I thought I kind of knew what my expense ratios were on my funds, but I was a little surprised.
Okay.
There were a couple definitely higher. It's definitely worth the exercise to go through and see what you got. Maybe look at changes. It was easy to, like I said, find it.
Okay. Did anyone do the homework? Okay. Were you surprised?
Price. I compared like one we have at the firm, and that was 1%. And then I saw like a Schwab account we have, it was a lot less.
Okay.
Expensive.
Okay. Monica, any thoughts?
So I have a portfolio with Ameriprise, and they've been very secretive about what their fees are. So I definitely I was going to make an appointment with you to try to figure out what to do. It's just individual stocks, and it's a portfolio.
Okay. Yeah, we can talk more. Okay. So we'll get into today's session. And this is a quote I found. So a hammer can either build a house or break things. And the same is true for financial products. So if you don't know what it's trying to do, that can hurt you. 2 very common financial products are insurance and annuities. And Lynn had brought up annuities, and she talked about it, pensions. So we talked more about these 2 products. So some common risks, like why do we insure? We insure because we want to get rid of risk, like, or we want to transfer our risk to somebody else. So there are some common risks. Premature death. If you have somebody depending on you for income and for care, then you have this risk of premature death. Then there's disability, medical needs, property damage like auto accident or hailstorm or fire causing damage to your home. And then personal liability. Someone comes to your house, there is water on the floor, they slip and fall, and then they sue you for a couple $1 million. So, so you can either self-insure and retain that risk, or you can transfer it to the insurance company. So in case of premature death, you have life insurance. For disability, you have disability insurance. For medical needs, you have health insurance and long-term care. And then for property damage, you have property and casualty like your home and auto insurance. And then personal liability, there's something called umbrella insurance, which some people are not aware of. So the question is, do I need insurance? And there are ways to, and I'm not giving you advice on whether you need insurance, but like there are some ways to assess whether you need insurance. So life insurance, does anybody depend on you? You have dependents that rely on you for income. Disability, are you still earning? And most people don't realize that the risk of being disabled is a lot higher than the risk of death. And most people forego disability insurance. So if you are earning, then you may consider disability insurance. Then long-term care. There's this website, carescout.com, that'll give you information on different types of long-term care. So in-home care versus going to hospice or like a medical facility. And you can put your zip code in there. So I tried Easton, and the nearest one it showed me was Delaware costs, but you can put Baltimore and then it'll show you Baltimore, like Maryland related costs. So here the question is whether you're better off self-funding, like if you have enough assets to fund your long-term care, or whether you need that longer, because it can get expensive. And you have a handout, so take time to review it later on. It has some questions that you can go through, like what are some. So these long-term care policies also have some restrictions on how many years of care they cover, what kind of care, are there any elimination periods. So an elimination period is from the time you require long-term care, how many months you will have to self-fund your long-term costs. And then other considerations are longevity, whether your parents or grandparents require any long-term care and for how long. So a lot of factors go into that determination. But long-term care, again, like it can be very restrictive and also very expensive. And then home insurance, like this is like without making a recommendation, I think like it's wise to have home insurance. And personal liability, like umbrella policies. So if you don't have an umbrella policy, I would talk to either your insurance agent or shop around and look for umbrella policy. They are not very expensive, but they will really reduce your liability, and you can get it for really cheap. So insurance is not really for something that can occur very frequently, except medical insurance, because it may occur frequently, but the costs may not be prohibitive. But most insurance, like most expensive insurance, is for events that occur less frequently, but the impact can be devastating. And the best case scenario is when the insurance company wins, right? They don't have to make a payout, but also because you don't suffer a loss. So that's the best case possible. Uh, Term versus whole life. So in my practice, I don't remember any instance where I have recommended whole life insurance to anybody. I've had a couple of clients who had whole life. And the cost of surrendering that policy was high, so I recommended that they keep it. But I believe that insurance products are like they're supposed to be protective, and they're not an investment product. So don't treat them as such. So for people who don't know the difference between term and whole life, so whole life carries a cash value, and the way like financial advisors or any financial professionals they sell these policies is as an investment product, and they will try to guarantee a return on insurance, or they will tell you that this return is much better and there is no risk and all sorts of sales gimmicks. The truth is that they make commissions out of selling insurance, and so it's not really an investment product. There may be reasons for some people to buy whole life if they have dependents who have special needs and they're worried about what may happen to their dependents once they are gone. So certain special cases. Any questions until this point?
So do you automatically lump a variable universal life policy in with whole life?
Yeah, I would I permanent life and term life, and most of the times, typically, for my clients, term life has been more suitable instead of permanent. Okay, so annuities. Annuities are also insurance products in which you make an investment, like a lump sum investment, and then the insurance company guarantees periodic payments, like fixed or variable depending on the contract, and they guarantee certain payments. What this does is it avoids that longevity risk. Because some people are worried about, am I investing my assets correctly? Is this going to last as long as I die, as I live? And they also have fear of like how much can I withdraw from my portfolio. So it avoids some of those risks. But I evaluated one of my friends' annuity, and she got sold into it because the person that she was working with, and she had moved away from a job, so she had a 401k, and the guy kind of forced or pressured her into buying this annuity, which I don't think was suitable. It had almost a 2% annual expense. And after 10 years, it had underperformed a global index. The fees and commissions are high. So last time we saw how a 1% fee can translate to like 20 something percent over 30 years. So that's what happens. The surrender, so you kind of get locked into an annuity, so you cannot really surrender or sell it for a certain number of years, typically between 5 and 10 years. And if you do, there are surrender charges, so it can be expensive. There are also tax penalties, which you probably know. Okay. So then the question is, who gains from annuities, right? And typically it's the salespeople because they make a lot of commission. So the initial period when you buy an annuity, a lot of that payment goes towards their commissions instead of being invested. Are there times when annuities are a good idea? So yes, there are. If you have your portfolio, but it's sitting in cash and you are not investing it. And some people are seeing, some people go through that. They have analysis paralysis. They are too scared to invest. In that case, maybe it is a good idea. Right? But for the most part, there are several restrictions and they are very expensive.
So one thing on that, where it's a matter of comfort level in that security of, you're going to have it. Are there ways to assure you're getting an annuity from a company that's going to be there? I think that was like, so I never bought long-term health insurance for the very reason that I wasn't sure those
If the
companies were
company-
going to be there. And some of them folded.
Yeah.
Right? So some people had put money in and ended up with nothing. That kind of carried over for me to things like this. I mean, T. Rowe Price has been around, Vanguard's been around, they're long story companies. They seem to be run well, but
Yeah, no.
but are there ways to investigate?
So there are, so Doug's question for the recording was that are there ways to investigate whether a company is going to be around for a long time to assure that you receive those payments? So there are rating agencies, and you can look at one of the rating agencies that comes to mind is AM Best, and they do rate these insurance companies. But again, like a good rating today does not necessarily mean that it's going to continue in the future. So a good way is you may be able to create your own annuity, and we'll talk about that in the next session next week, using treasuries. But yeah, there's no way to guarantee whether a company is going to be around. But I would rely, if you wanted to still like buy an annuity, I would go with a reputable company with a higher rating and good financials. Okay, so an annuity solves a very specific problem. You shouldn't buy one if you don't understand it. And if it's going to create problems for you, but you cannot access your own money, it gets locked in, and if that liquidity is important, then we may not be the best. So product reality check. I would go through this checklist. Whenever you're buying anything for your portfolio, do I understand how this product works? Is there liquidity? Can I access my money if I need to? Is there a clear benefit? And does it have a purpose in my plan that cannot be fulfilled by something else? Because when you use your money to buy product A, you don't have that money to buy product B. So there is always this trade-off. Your money is locked in here, so it's not like money is an unlimited resource. So use it wisely. If you can't explain a product in a single sentence, it's too complicated. And same thing, like when you're discussing it with financial professionals, your advisor, if they tell you that, oh no, it's too complicated, don't worry about it, like it's not for you.
You're not a fan of financial engineering.
So that's, yeah.
Before you go on, the advantage of both life insurance and annuities is that you're not being taxed during that period, well, at all, insurance.
Yes.
And for the other, for the period that the
Correct, yeah. So which is why it's important to analyze, so Carol's question was about taxation and that life insurance proceeds are not taxed. So same thing with term life, right? Like term life insurance proceeds are not taxed
As income tax.
as income.
And you'll count as part of your estate.
Yeah.
Likely to count as part of the value of the estate for purposes of estate tax down the road if you are in such a bracket that the state tax kicks in.
Correct. Yes.
Thank you.
So yes, they're not subject to income tax, but they may be subject to state tax. So doing an analysis between how if you're paying those premiums for permanent life insurance, if you invest those instead in a specific broad index fund, a mutual fund, or an ETF, how would that grow versus what the cash value benefit? So I think it's important to do that cost benefit analysis through a tax lens to understand the true trade-off.
Is the premium deductible when I buy that policy?
So it's always this way, right? If the in terms of tax filings,
For whole life insurance, if I go buy a whole life policy and I pay high premiums for the whole life policy, I'm accruing some cash value policy. But are my premium payments deductible for my income taxes?
I am
I don't think so.
not sure. No, right?
I don't think so.
I think they are.
I think not.
It's just your income, and then yeah, it's not like it's giving money to a nonprofit or something like
Right.
that. Yeah.
Right. No, it's not a deductible.
So for disability insurance, and it's not really relevant, but I'll still tell you. So if you have a group policy to an employer, and if the employer is making those payments for you, the benefits are taxable. But if you are making payments using after-tax dollars, then the disability income is not taxable. So, yeah. I mean, the way I understand it is if you make premiums with after-tax dollars, then the benefits are not taxable. But if you took any benefits on the premiums, then the benefits are taxable. So retirement scams. I've heard so many horror stories. I just heard one last week. But we'll go in order. So romance scam. There was a story in a Wall Street Journal a few months ago where a retired couple, the husband was communicating with somebody overseas and he fell in love because he felt neglected at home and ended up sending a ton of money to this woman who didn't exist. It was all a scam. And then later on, when it was uncovered, there was no recourse. There was a lot of regret and shame, and couldn't share this with his wife because of all that had happened. Very, very common. And they target retirees. Unfortunately, at that point, there is no additional income coming in. Like, this is it, right? Like, it's hard to go and find a job at the age of 70, and it's just brutal, but it happens. Tech support scam. One of my friends who was an advisor, she was visiting her client, and the client was on the computer, and luckily she reached in time, but there was this guy who was trying to help her with her computer. And he said that there was some issue that she should get in control, and he was going to basically go in and empty her bank account. And luckily that didn't happen. Grandparents scam. You may have heard this. I saw this on the news. A grandparent got a call from their grandchild. It was an actual phone call. They could hear the grandson's voice. And he said, I'm in trouble, I'm in Mexico, I got caught by the police, I had drugs, and blah, blah, blah. And they asked the grandparent to send him some money and not tell their mom and dad. And they wanted to help their grandchild.
I had a young one.
My mom fell for that. Oh, and she called me And when it is everything okay with Alex, because that's who she said, I'm like, she starts explaining to me, I said, Mom, why would Alex call you for money? You have no money. He would have called us first, and he has more money than we do. Luckily, the bank actually was very good about it because she had initiated it, then called me. But yeah.
Yeah, my dad fell for my nephew. He was in the service, and my dad got a call that in an accident, and they wired through Western Union $3,000. Western Union eventually had to repay a piece of that, but they sent it. They got a small bit of that back. But I got the uncle one. It was my nephew Todd. The guy must have looked at the Facebook page because he knew enough about Todd. He actually kind of sounded like he called me, and he was in Florida, and he knew he was in the military, and he was on leave, and he'd gotten into an accident. And the guy said, "Hey, for $3,000, we won't report it, blah, blah, blah. Could you send me $3,000? And I said, "Sure, Todd, I'll be glad to." He said, "Just got to answer me one question." Because I was actually sucked in. Then the little red light went on. I said, "Tell me the name of the street you lived on when you were 3 years old." Which I figured that wasn't going to be in Facebook. And the guy hung up.
Oh, wow.
But
Did it sound like your nephew?
it did actually
My mom
sound a
said it
little
sounded just like Alex.
It did sound a little, but all those young kids, they all sound.
Now with A1.
Yeah, that's the thing. It's scary. The ability to emulate voice is scary. So, I mean, with my mother-in-law has suffered. Everybody would call this. I finally got to the point where I made her a promise, because I knew she would keep a promise. Promise me before she ever wrote a check again, that she would talk to me about it first. Just talk to me about it. And that ended up stopping. And she gave what I wanted.
I can totally see my mom doing it for. So my mom is like the kindest person ever, and she just dotes on my daughter, and I can totally see her doing it. And I mean, I wouldn't blame her, but like we tried to tell her so many times that you cannot trust people. It's hard.
We have some friends that went to Europe and we were a study group together. We all got an email that they were trapped in London and couldn't come home. We need money immediately. She grew up on a home with 40 rooms. His parents owned 3 high-rises in New York City. I said, I think this might be a scam. But they got everybody in our study and knew they were in Europe.
Did they post on Facebook or?
No, that was, I don't think so.
I'll get into the
I'm not a Facebook
tour
fan.
company or the study group company, and
Yeah.
they had a whole roster.
Yeah.
So,
Yeah.
What other guy? Like me.
like I say, being recorded, so.
There is another, I'm interested that you put the financial advisor scam as the last one.
I thought of it. Like I was on the FBI page to look for a list of scams,
Yeah.
and this wasn't listed. And part of it, I'm like, I'm gonna stick it.
There is another one that's going around now, which is, do you want a job scam?
Oh, yeah.
Do you want a job scam? So I get like 3 of those a day. And we're hiring for so-and-so, or I'm so-and-so with Snappy, or with somebody. Okay, we're hiring you. Your resumes come to our attention. I mean, that's a crazy scam going on.
And like people who are not looking for a job would ignore it. But if that one thing just resonates with you, you'd be like, oh, how did this person know I'm looking for a job? I need to apply. I can give you this.
Right.
Another one that keeps coming in because we moved from another state, we still don't have the phone, the area code. So they think we're living in California still. So I'll get these phone calls and they never stop. They go on and on. Finally, I found that if I will answer, then I make up a language. Sounds like Chinese. I just start talking like regular. Never get a call back again.
Exactly. That's interesting. Somehow, like, I think I've enabled a setting on my phone to send all unknown numbers to voicemail. So I never answer. And I miss some important calls, but like if they leave a voicemail, I'll call them. But at least, yeah, I don't have to deal with them. I don't have to talk with them.
We better let you get back to your list.
Yeah, no, I was gonna mention, yeah, my husband's first cousin, who ironically came to the US to study. She was in the middle of her cybersecurity program, and she got scammed. Somebody called her. They said they were from either the IRS or the immigration, and she had a valid visa. She had no reason to worry. But she just got so scared. They asked her to go to a convenience store or something and buy something, like something that's non-traceable, either a gift card or crypto, something of that sort. Luckily, she only had 1,800 in her account. Like that's all she had, and she got fleeced of the whole amount. But if she had more, she would have lost everything.
Oh, so here in Pollitt County, there's a detective in the police force, and that's his specialty, scams. It's Detective Sam Faggot, and he, great guy. We had him come and see him actually,
That class again.
and you can call him if so. And the thing is, right? None of you are going to fall for a scam, but you have friends that are, right? And we have to make it comfortable for them to talk to you about it, right? And so what I try to tell people is, hey, if somebody's asking you for money, call Sam. Talk to them. It's amazing how much money gets stolen out of Talbot County. It's just
Spam who, Sam, what's his last name?
and I'll get his name. I always pronounce it incorrectly, but he's here in you can just call the Talbot County Police,
Talbot County Police.
right?
As opposed to the sheriff's office.
Well, it's the sheriff's office. I'm
So it's the Talbot County Sheriff's office.
Sheriff's officer. Yeah, and they're wonderful, and they're very understanding, and very compassionate, because they understand the embarrassment that we feel, right? So they're really good about it. So it's a great resource, and they know about. They try to post to the website current scams that are going on. We've had the romance scam. We've had a bunch of the grandparent scams that look at us, right? We're all subject to that one. And so, yeah.
Oh, and new one my kids called me about, Uber, which we don't use much around here, but when we travel, we use Uber. And there's a new scam where the Uber driver will call you, and it's like if you've ever used Uber, it tells you who your driver is going to be once you choose them. They call you and ask for a code, and you give them. If you give them the code, and then they cancel the ride, and the scam part is they take the money that it's when you've paid in advance kind of thing where you can schedule. You reserve it ahead of time. Like we've done this for an airport. Like we're flying to London and we reserve an Uber driver to pick us up and take us to the airport or to the hotel. So it's that kind of thing going on, which I've never used a code before. And I've used Uber a lot of times, so I'm a little confused about that part of it. If maybe that for people that don't use Uber a lot and they think they're it's
So the code is very common internationally. Like in India, people may not make payments through the app.
okay.
They get the code and then you can pay cash to the Uber driver at the end of it. It's different.
So it's Detective Samuel Faggot. FAGGERT. And he's the detective's office, but you can just call them mainline.
FAGG.
ERT.
Our role is to scrutinize everything. Scrutinize every bill, every situation. There's so many people trying to get money.
Oh, it's great.
Yes,
Everywhere you turn.
yeah.
I think particularly as you get older, or not so savvy with high tech, it becomes more of a challenge. Yeah.
And they try to, establish trust before. So, Facebook Marketplace or what is that other website? Craigslist. If you're selling something old, and let's say the price is $100, and they'd be like, "Oh, I'll mail you a check," and they mail it out for 1,000, and they either say, "Oh, I made a mistake" or something. Can you return my 900? You put in the bank, your account gets updated for that $1,000, and then you send 900, and then this 1,000 goes away. So now you're out $900. So all kinds of scams. The most recent one that I heard about on Sunday, my friend told me her husband got a text from her with a link to send her some money. And it wasn't from a different number. And it came in the text messages. So they had exchanges. And then
Wow.
this thing came. Like, this is something new. I had not heard of this one before.
Yeah, I haven't seen.
And so I'd be very careful if you receive something from your spouse or loved ones and it's unlike them. Call them to verify. Make sure you have, like, I'll go to the next one. But I wanted to also go with the financial advisor scam. So the example is made of, right? So you have like different entities in your financial life. You may have an advisor, but then you have your custodian. You always want to make sure that these two are not the same. So your custodian may be Vanguard, Fidelity, Schwab. So some entity that holds your portfolio, and then your advisor may have trading discretion, so they may be able to trade in your account. But what you don't want is your financial advisor to send you performance reports and statements. You want your statements to come from your custodian because that's what Madoff did, right? And he cooked his books and he sent all these statements. So just typed statements and made up numbers.
So that's how he did. So he actually created false statements. People thought they had.
They had money, but they didn't.
I often wondered about that. Like really smart people do sucked into that.
Yeah. A lot of smart people. But and the height of it, like how do you please your own family, right? Like, how do you do that? Oh, one more financial scam that was rampant. I don't know if it still exists, but when my dad was still working, like occasionally he would get these friends to come over and say, invest X number of rupees with me. Over a period of 30 days, your money will be doubled. And if you get more, so it's like this pyramid scheme. You get more people involved and you get more money. And what people don't think about is the interest rate is, let's say, 10%. And stocks are generating, let's say, 20%. How and where is this 100% return getting generated in 30 days, right? Like, so if think about those things. I don't know if this scam exists today, but it was rampant. And timeshare may not be scam, but remember like how they used to do all these sweepstakes and they'll call you and tell you that you won something and you have to go for a dinner. And you went and they would sell you timeshares. Many people actually bought timeshares and those are really difficult to get out of.
There's another one that's very interesting. In And this happened in San Juan, clerk was a clergyman at that time. And we had a situation where workers were coming in and finding a man who was old and telling they're going to marry him, fall in love with him. They have somebody come in, perform the ceremony, send it in, then the person takes off with all the money. And we met with the other clergyman. Unfortunately, I had a lawyer with me who was aware of this. We were visiting a man. He says, I'm falling in love. I'm going to be getting married next week. And so we went immediately to the owner, and because she was hiring women from a certain culture who I mentioned. But they had this history of doing this and put a stop to it. And then they informed all the restaurants of this dynamic with the people from that particular culture. And she could have got tons of money. This guy was very naive and was basically dying.
Very
And
sad.
it was happening, particularly wealthy areas in Southern California.
So the other thing that's a little different, but I never click on a link, unless, you know your spouse, your friend, you know that it was they can send it to you because, a lot of times, right, with AI, some of these links looks like it's from your bank, or here's your statement, or something like that. And, so just, if it says that there's a new statement available, go to the website, sign in, and look at your statement. Or if it says there's a message or something, go to the website and sign in for the same. Yeah.
Don't open any attachments.
Don't, right, you get the thing that says, oh, we've got this fax invoice for you or something, we're gonna charge you $900 for some security software. And they don't know this. Never click on a link. Go to your, and what, you use like Norton's or something like that, go and look on the site and see if it says you're being billed. You won't be.
So some of the key triggers, urgency, they try to make it really urgent. Do it now, do it now. Fear, trust, they're calling from the IRS, from the bank. In my case, like immigrants, it's USCIS. There's greed, 100%. Like there is no such investment with guaranteed return and no risk. There is always risk. They try to build a rapport with you, family ties. They may do some favors for you and then ask for money, like a big favor later on. And some of the scammers take their time. It could be over weeks or months, sometimes years. So be cognizant of it. And then like try not to be overconfident. Here are some items that you can do. If you receive a call, make sure to call. Like instead of panicking, call the official number. Don't share your SSN password with anybody. You can freeze your credit because identity thefts happen a lot. You get those credit card offers, you're pre-approved for something, and people can use those to steal your identity, create new or new accounts in your name. Always discuss major financial decisions with a trusted advisor or close family friend, or I would stick to family. And share a mobile family password. So my family, we have a password to avoid any spoofing and AI replication of voices. And I must tell you, so I create videos on YouTube, and occasionally I may make a mistake while I'm saying like instead of 28,000, I may say 26,000. And then in the editing process, when I want to correct it, I use this software called Descript. And I can select the word, highlight it, and change it. And it changes my video and my audio. And
Oh,
it
you don't have to re-record.
sounds
Oh.
just like me.
Okay.
So yeah, there's sometimes it glitches, but for the most part, it's like you wouldn't be able to tell that I made an error.
Yeah.
So yeah, and one thing it's not a scam really, but it came to mind, so I'll share it. some people like, and I think my dad probably would have done this. He was buying a condo in Bombay, and he wanted me to be a joint owner, or at some point he was also considering buying it in my name instead of his. And at that time, I was not a financial advisor, so I didn't know about it. But I'm glad that he did not do that. So what could happen is if he had bought that place in my name, and let's say I die, who gets the house?
Oh,
My husband, right? And I try. He's really sweet. He's awesome. But if he marries and then he dies, who gets the house? The new wife gets the house. So you want to protect your assets, is what I'm trying to say.
Will we be getting copies?
Yes.
Yes.
You can
right.
Yeah,
Last week.
last week, I'll send you.
Okay.
But does a prenup protect that?
yeah,
The
it
second round, I mean, the second.
yes.
That would
Yes.
protect.
Yeah, but then it would probably go. So if my parents are still alive when I am dead, it's up to my husband then, right? Whether they get to live in the house or not. He could sell it and they would be homeless. So this is something that I advise all parents. And I know that especially Indian parents are very, like we have a different family dynamic. So it's a little, things can get mixed, the lines can get blurred a little bit, but try to avoid it further. So, so we talked about scams and bad products, but like a big risk is us and what we do to our portfolios. Any questions until this point? Any comments? Monica, do you have any thoughts or comments?
I'm good. Hold on.
Alright.
Yes.
I have another one that you get like you're watching YouTube and this ad comes up. I found if you look at the ad, I probably spent one time I had ordered a big bottle of cleaner kind of stuff. Came in a little tiny bottle like that. So from then on, what I do, this a couple of years ago when we first moved here, what I do now is I look at the name of the product and go to Amazon. It'll be half the price on Amazon as it is on that. Yeah. Or it'll say it doesn't exist.
And what you can do in case you make a mistake, right? Like preferably use your credit cards to make purchases, and you can always dispute it. If something bad happens, you can call the credit card company and they take care of it. Okay, so we talked about investments and returns last time, so I'm going to come back to that. This is the S&P 500 index performance from 1991 to 2020. And this first bar, this first bar shows the performance of the index over that period, the 1999 to 2020. And you see that the return is about 11%. And so if you invested $1,000 at the beginning of 1991, your investment would have grown to roughly $20,000. If you were able to miss that one single worst day over that 30-year period, your investment return would go up to 11.16%. And the investment amount would have gone up to 23,000. If you missed 5 worst days, your investment would have gone to about 34,000, generating a 12.6% return. And then if you missed the 30 worst days, instead of making 10.69%, your returns would have jumped to 18%, and you would have your $1,000 would have grown to 147,000. So by missing the 30 worst days of the market. So 30 days over 30 years, your annual return would have increased by 7%. But on the flip side, if you missed one best day of the market, instead of 10.69, your return is down to 10.29. And by missing 30 best days, you are here at 4.38% instead of 10.69%. So I hope you understand where I'm going. So a lot of people, people even in financial services, they get scared when markets do bad things and they sell at the worst possible time and then try to get back in at the worst possible time. And so by flip-flopping, you lose money. Because what you're trying to do is avoid the bad days, but you also in that process kind of avoid some good days, and that hurts performance. So if you stay consistent, is that in consistent investors are often rewarded. So this is the S&P 500 from 1979 to 2022. And the gray bars indicate different recessionary periods that occurred. And you see that the market went down during recessions, but then it bounced. And there is no way for anybody, like no matter how smart they are, and unless they have a crystal ball, they are not going to be able to predict with certainty where the market is going to go and how long it'll take. So right now, I think we are in a bubble, but I'm not advising anybody to pull money out because I don't know when it's going to happen or when the crash is going to happen. And I don't know when the right time is to jump back in the market. And that hurt a lot of people. So the best way to protect yourself is again like create a solid financial plan. That way you don't have to do this flip-flopping and worry about what the market is doing. Plan for the next 5 years so that like you have enough cushion and then invest the rest in growth. Any questions? This is something people constantly ask me. What should I do? Trump is in power. You may love him, you may hate him. Market doesn't care. So this is the S&P performance under different regimes. And if you notice, there have been both recessionary periods and booms during each regime, blue or red. Eventually, the market has gone up. So one person or one party does not dictate what the market does. Companies reward CEOs based on how their stock is going to perform. So typically, like, stock price is one of their criteria for how they are incentivized, how they see their bonuses. And politics may affect stock price or the overall market in a specific period, but over the long term, it does not. Nobody cares. So don't focus so much on politics for your investments. And then here's the final one. It's a busy slide. Can you read it or? I'm having trouble reading it. Okay. Okay. So what this chart is showing, so from left to right is years and bottom to top, like each color represents a different asset class. And at the bottom is the worst performing asset class for the year. And as you move up top, it goes, the performance goes up. So Trina, you wanna scroll to the left? So in 2004, REITs, so real estate was the best performing asset class with 30% return. And if you can scroll to the bottom, cash had the lowest return with 1.24%. And then the following year, you had commodities like gold or precious metals and other things at the top at 21%.
Is that helping it off? Can you guys read that?
Yeah.
Okay.
Yeah.
And global bonds were the worst with a negative 4.5%. And if you look at the and the next year commodities were at the bottom with 2%. So people like talk about crypto, right? Like it's time to get into crypto, let's buy crypto. But by the time you hear about it, it's already like it's hiked up, the price has gone up. So if you buy next year, guess where you will be. So a good approach, if you look at the gray box which says diversified portfolio, this one is like a average of all these different plans. It stays kind of at the middle. So it's not going to be the best performing asset class, neither it's going to be the worst performing. So you kind of stay in the middle. And I say like investments is one area where you want to be average. You don't want it's great if you get above average returns, but it's completely fine. You have this steady growth in your portfolio and you're kind of in the middle, but you're not the worst performer. So that's what that tells you. Again, I'm not recommending that you do like an average of all these asset classes for your portfolio. This is just an example. So that's that. Any questions? Sorry. Yeah, and Trina will send you all of this in PDF.
Yeah, I just have a hard time seeing it, so I can blow it up on the picture of my phone.
Would an index fund fall in that diversified level, or is that
So
reflective of a mix of bonds and treasuries, stocks?
yeah, so the average one in this case is a mixture of everything that's on here. But large cap where is it? Large cap growth is more representative of the S&P 500.
And you mentioned just about the long-term care. And like,
It's more for your review. There is a specific section that you can look at for your options. Yeah, it's more for your review. I wasn't planning on discussing it today.
Does Maryland offer tax incentives for long-term care insurance?
What's that?
Does Maryland offer tax incentives for long-term care insurance?
I am not specifically for Maryland. I haven't recommended long-term care in my practice yet. And but I know for like if you have an HSA, you can use a certain amount if you need long-term care, then you can use a certain amount, up to a certain amount for towards those premiums for long-term care.
So the HSA, which is tax.
Yeah, and you can use those for
Right.
Medicare.
Oh. So,
Well,
but then you have to have a situation where you're allowed to pay into an HSA.
right, or yes, or still have carryover from when you
Right.
did before.
Yeah. Yeah, because if you are on Medicare, then you cannot pay into it.
Right.
So, yeah, so that's all I had for today, and some homework. So I have a comprehensive video on our website for annuities. It's not the video is not here, but you can, if you are interested, you can go to my YouTube channel and then search for the word annuities, and it should come up.
Is that, will you double check that URL, please? Because it looks like there's a period in YouTube that ought not to be there.
No, it does that.
Is that correct?
Yeah, that's.
That's how it looks.
That's,
Yeah.
No, it's very weird. Very weird, but
Nico,
So I actually had a question on long-term care.
Yeah.
So we came up with a strategy and I want like your opinion on it. 6 years ago, we looked at long-term care insurance and it was horribly expensive, especially for my wife. So what we did is we took the risk that we wouldn't need it right away. And we bought the VUL policies,
Okay.
which had a few advantages. Number one, we weren't paying the premium for the long-term care insurance. So that provided a good chunk of the money going in. And then you don't need to qualify by the rules of long-term care. So you can take the money when you determine that you need it for long-term care. And that the investment benefit from it that you take out is treated like a Roth IRA. You don't pay tax on that benefit coming out. So overall, we think that as long as we don't need long-term care before the age of 70, the accounts are already worth a lot more than long-term care total amount would be.
Okay. So it worked out.
Yes, it worked out. But I know you said you weren't a fan of VOL policies in general, but in this particular case, I think it might have made sense for us.
Yeah. What is that in that? I don't actually.
It's a variable universal life policy.
Well.
VUL, yeah.
any other?
Yeah. Comments?
is that it for the day?
Yes, that's all I have prepared.
Thank you, man.
Thank you. All do.
Don't get scammed.
Yes.
Oh my God.
Yeah, if I get